Hi, Okan.
Hi there. Can you hear me well?
Yeah, yeah. Are you on a
Yep.
phone in the car?
Oh, no. I'm fine. I'm in somewhere else.
Oh,
So
okay.
I'd like to. So I'm okay to speak right now and share my
Okay.
opinions. And
How
I
about
prepared some.
how about sharing your screen? No?
Yeah, I'm going to share my screen with you.
Oh,
Let me
okay.
open the screen I have here. Okay.
Okay,
Okay.
yeah.
I guess you're seeing a PowerPoint presentation on which you
Oh,
have some charts.
okay. Yes, we see
Um,
them.
Okay, great. Now, let me start with my opinions about the euro currency, the euro against the dollar.
Okay.
What I have been doing so far, I mean, lately, I am watching the inflation swap spreads of the dollar and eurozone, and I see that although the euro dollar is inclined to go up, um, up to maybe 1.10 or something like that, there's a great chance that the pair may fall in the coming weeks. And let me explain you why I think this might happen. First thing I look at is the inflation swap spreads. I see that, well, this inflation swap spread is calculated by subtracting the euro inflation swap spreads, then the dollar's inflation swap spread. So it's USD minus euro. As you can see, the euro USD minus euro inflation swap spread is declining. This suggests that um, there is less the nominal interest rates protect against the unexpected inflation much better than the the euro.
Okay.
So from this, I
So
jump
we have
on to
there's
the
more
second.
monetary restriction with the dollar right now than there is in the euro. So the interest, is it about
Exactly.
the interest rate differential advantage dissipating?
Uh, yes. For
All right.
that is for now. However,
Okay.
for days to come, if I switch to the next slide, if you look at the spread of the Europe's 2-year expected real returns and that of USA, and we calculated as euro minus dollar, we see a dollar positive environment, and I tell you why. Well, simply because in dollars, I mean US expected real return is actually is well higher than Europe. So from this we can conclude that the for stronger euro, the ECB will need to show more action than it has announced recently. So if we combine these two charts together, um, these two pictures, the picture one is showing us that inflation swap spreads are dollar positive simply because nominal rates in the US are are adequate for investors to have enough cushion for inflation risk. But that is not true for euro because inflation risk is higher in Europe than US. So
Why?
with this,
Why? Because of their vulnerability to energy shocks?
yeah, there is vulnerability of energy shocks, and there's also supply shock because in Europe,
Nord
if you,
Stream is gone. Everything,
yeah,
right?
because if in Europe uh, the economy stops, then the supply risk causes higher inflation. So, and also this kind of environment we have not witnessed for a long time. So there's greater inflation risk in the Europe than in US. So that's the reason why the USD minus euro inflation swap spreads are falling, and and this implies that this implies that Europe's 2-year expected real returns are falling with respect to that of USA. If you look at the chart on the right, which is calculated as euro minus dollar, this suggests
Yeah,
that the practitioners, the traders, count on euro because of high uncertainty of inflation.
got it.
So, so all in all, there's less inflation risk and high expected real return for the dollar, so which is a dollar positive situation, and this leads me to believe that the euro dollar currency, I mean the euro dollar pair may rise up to maybe 107, 108, maybe in the coming days or so. But if the ECB doesn't show much of monetary action that it has announced recently, as you know, Lagarde has told the markets that there are good reasons to increase the rates by 50 basis points or so. But I think they're going to need to do more if the euro, if they want to protect the euro against any fall. So if that happens, they protect the dollar. If I mean, if Lagarde says we will increase the rates even more, and then we can expect the pair to go up to 121 within this year. But if it doesn't, we may expect this pair to stay in between 103 and 110. So that's
All year,
what I
huh?
think about.
Yeah.
Yeah,
You
for
think
the
we could
entire year.
enter those kind of doldrums?
Say again?
In this environment, do you think we could have that kind of stability? I mean, we've been ranging right
Uh,
now. I mean, look at cable. It's been ranging in a 400 pip range for 4 months now, 3, 4 months.
yeah, look,
So
when I look at the implied volatility of the euro dollar, I see that it is fairly low.
yeah,
And
really low.
well, I can't say if it will rise in the future, but currently the implied volatility, at least for the 3 months, is very low compared to like 6 months ago.
Yeah.
Yes, I understand that the forces that influence the euro dollar or any pair is very strong nowadays, but those forces are so even that there's a great chance for the pair to remain in a short band. But only if the ECB, I think that if ECB shows more, uh, I mean, willingness to increase the rates even more, maybe another 2 times 50 basis points, then yes, we can then move about towards 120 level.
Okay.
Yeah.
All right.
And
Do you factor in any geo risk? Say the Ukraine war starts going in Russia's favor. Is there any geo risk of people
oh,
wanting to hold
Dale,
euros?
I think that issue, I think is going to extend for a long time. So I mean, I don't know if you realize that, but the war issue is not in the
In the
agenda
market?
of the world anymore, like it has been in the past 3 months or a year. Now it looks like not like a war in between two countries, but it's like a
World war.
uh, well, it looks like to
Proxy.
me, I feel it looks like a regional conflict than a real war between two continents because the war is happening in a very small and zone.
Well,
I
that's
mean, that's what
yeah,
I see,
interesting to
how I
look
see
at it that way. Yeah, yeah.
it.
Okay. All right. So
So
a lot of people are exaggerating the impact on markets
I think
and
so.
talking about the war when
Yeah, I
talking
mean
about the war.
that's
Okay.
that's like kind of an agenda that we should not be looking at. Um, we should be more interested
We
in
should be
the
looking at
economy.
what you're looking at, yield differentials and what the markets are saying in your PowerPoint
Yeah,
slides, and not the newspaper.
yeah, that's
I
Yes,
got you.
exactly.
All right. Okay. So was there anything else you wanted to share with us today? We
Yeah, I
got
just
the,
if I have 1 more minute,
yeah.
I want to switch to another issue, which is the financial conditions index spread of the eurozone and the dollar and the USA. If you
Okay.
okay, the financial conditions index is kind of an index that if it falls, it tells you that there is accommodative economic and financial environment. If the index rises, then there is restrictive environment. As you can see on the chart, that on the white line, this index has been falling for some time, and now it starts to go up, but we're not sure how far it's going to go up. But we see that this financial conditions index shows that there is in the eurozone there is still relatively more accommodative economic conditions. So this means that uh, ECB will really need to, if they want to control the inflation, they will really need to increase the rates more than they have mentioned so far. Yeah.
Okay.
So that is what I
What
wanted
do you
to
think
tell
of
you.
the trade of people going outside of the U.S. and, you know, Europe, emerging markets? But I mean, since we're talking about the euro, why don't we talk about European markets? Do you think that's the right way to go, based upon what you're seeing, that foreign markets have a bit outperformed the U.S. in the first month or so, and will continue to?
Well, uh, it looks
Maybe
like
you don't
yes,
know.
but because of the strength of the dollar, sorry, the weakness of the dollar, um, what you just mentioned seems to be even more true because the dollar is also weak. So, assuming that the dollar is weak and other markets are performing better than that of US, then what you're saying is, I admit, yeah, there's this.
Yeah.
Uh,
I mean, certainly the tone has changed that even when people are talking downside in euro, they're not talking parity right away or 98
exactly. Mm.
anymore. They're talking 104, 103.50. So even targets have become much more conservative in a bearish move in the euro than it used to be.
Yeah,
And
I,
it
I, I,
and it's giving up ground very begrudgingly, having traded it, watched it over the last 2 or 3 months. Don't you think?
right.
Well, you can't get two
Yeah,
days put together. It's like a chop fest, grinding lower or sideways.
well, I think looking at looking at the financial and economic environment in Europe, uh, uh, inflation risk is really there.
Yeah.
But I have to tell you that the ECB has to count the economic economic slowdown to the point where it can impact the supply. Uh, because as we have talked about this before. Back in 1980s, what happened in the U.S. is while they were trying to the Fed was trying to curb the inflation, they overkilled the economy, and then the supply issues caused even higher inflation, and ECB is in between two. Would they, if they want to control inflation too much, and then they might risk overkilling the economy. So that's an even greater risk for Europe. So in this case, they're going to be in between. Uh, they're going to be they're sometimes going to show reluctance in increasing the rates, or they sometimes they will be talking more hawkish. So there's going to be a lot of uncertainty about both financial markets, equity markets, the stock markets, and also the bond markets.
Don't you think the
So
U.S.
so
U.S. is in a similar condition?
uh, well, I don't think the US is. Yes, it is in similar condition, but not as much as that of
I mean, it
as
hasn't the
the
Fed already. We don't even know. Already
well,
overkill. We've been.
not
They're
yet.
already too tight. Not yet. Okay.
No, not yet, because
How much
you
higher
know,
could they
look at
go?
the.
How much higher?
I think uh, another 100 basis point is easy to go higher because
Without slowing
unemployment
down
is
the
still,
economy. Yeah.
yeah,
Okay.
because unemployment is still up.
Yeah.
Employment
Well,
is
we'll
still
see
strong.
Friday. We'll see Friday if we
Yeah.
finally have a chink in that armor too. So my takeaway
Yes.
basically is we may temporarily have rallies to 107, 108, but unless Lagarde, goes a half and talks like a hawk for another half, look for
Exactly.
look for euro to fall to about the 104 level, right?
Yeah, exactly. Exactly. You got it exactly right. Yes.
Okay, so I mean that's a great forecast and timely, and appreciate you coming here and sharing it with us. Anything you want to wrap with? I'm best way to follow Okan, and you could tell he's a thinker, and he's looking beneath the surface with yield spreads, etc. Do you want people to contact you?
Yes, sure. Of course. You can contact me on Twitter if you like to.
Okay, give them your Twitter handle, buddy.
Yeah, sure.
At O at Go ahead.
It's at sign Okan Aybar. It's Okan Aybar.
Okay,
I can actually write
okay.
on my on the
I
chat. Let me
I
write
have
my.
I have one more question for you, my trading warrior brother.
Yes, sure.
Okay. Would you like to ride on a beautiful balloon way up in the sky in my beautiful balloon?
Well,
No?
yeah, yeah, I would like to fly.
So you're an aviator. You're a pilot, right?
Yeah,
So
yeah,
you're
yeah, yeah.
so anyway, my my trading warrior brother, you are welcome on my balloon any day. All right?
Okay.
And we'll hopefully get shot down, huh?
No, no, no. That I wouldn't want to do. That I wouldn't want to have.
All right, buddy. Thanks for laughing with me on we're just trying to get the juices going. Appreciate your call and your looks, Okan, and love to have you back. And good luck. I'm
Th-
rooting for you, and good luck until we talk again. Good hunting, buddy.
Thank you, Dale. Thank you, everybody,
Okay,
for listening to me.
everyone, Okan Aybar. You could follow him on Twitter at his name, uh, OkanAybar, and he's a thinker. So follow him. I think he's also registered CTA. So check him out. Thanks, Okan. Have a great week, buddy.
Thank you, Dale.
All right, and everyone, you could join the team in 22 minutes on the morning edge. And remember, don't just count your pips, count your blessings. And let's have a good week and let the markets come to you. Don't chase anything, okay? So I'm going to wait and see if these metals come to me. If they don't, there'll be something else. Okay? Take the pressure off. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.